Bitcoin gives you a base layer protocol to move large sums of money around at small cost in an hour. And it gives you a layer 2 protocol to move mid-level and small sums of money around instantly for almost nothing. On my Lightning wallet, I can move 1,000 Satoshis at the cost of 1 Satoshi in a second. I mean, simply put, Bitcoin's the best money that the human race has ever had the ability to embrace. We know gold is defective because of its mechanical nature, and we know fiat's defective because of its political nature. Bitcoin, why does Bitcoin work, right? Bitcoin has the things that you need in order to construct a shared, immutable, correct ledger, right? That's our target. Shared, immutable, correct ledger. And Bitcoin's got a base layer protocol. The base layer protocol is genetically encoded in the system from day one. The 21 million coins is one of the critical parts of it. The 2.1 quadrillion Satoshis, and no more than that. I think the second part of the protocol is not just the mathematical coin parameter. It's also the proof of work security model. So when we created it with 21 million coin limit. Satoshi created it with a proof of work security model. And that is the part that makes it more likely to be immutable and shared and correct. And the third part is the balance of power between the miners, the nodes, and the wallets, or the holders. It wasn't inevitable that you had to build it this way, right? Bitcoin is an engineered monetary system. So it's a feat of engineering. They built a protocol, they chose components, they chose the cryptography, they chose proof of work. All of these were engineered components. And then the balance of power between the miners, the nodes, and the holders with the wallets, that became clearer in the block size wars, I think. And following the block size wars, first miners were the nodes, and then the miners and the nodes split. And eventually we saw that the nodes themselves had a huge amount of power to check the power of the miners. But now we're seeing the emergence of the power of the holders. And of course, the holders all three of these dimensions are decentralizing at a rapid rate. So I would say that, we need the protocol at the base layer. That base layer protocol that I just described, that replaces the gold that was here at the beginning of the universe. And it replaces the base layer protocol that's the political artifact of any kind of fiat currency. The second thing that Bitcoin has that makes it a much better money is it has an application layer protocol. The base layer protocol, ensures that we'll never have more than 21 million Bitcoin. That's the most important thing. And then it ensures, what do I need? I need durability, integrity, and security. So I need to know that it'll never be more than 21 million Bitcoin, even 1,000 years from now. I need to know that people aren't going to monkey with, material things like the frequency or the block size. That's the integrity part of it. And I guess in durability, integrity, they go arm in arm, right? In a way. Because if you change the frequency and the block size, you may inadvertently end up changing the limit at some point because you break it. And then you need security. You need to know that no malefactor can hack it or break into the network. So we're getting all of those things, the security, the integrity, the durability via the base layer protocol. But the application layer protocol is also important. And that's, the ability to do final settlement transactions at the base layer with a Bitcoin wallet address. And, we could debate, interestingly, Robert, like, do you need Lightning or not? And that's an interesting debate, because I think that if we just had the ability to do base layer transactions on the Bitcoin network, the system is still perfected enough to serve as a monetary system. Mm-hmm. You would end up with the layer 2 application being built via counterparties with some counterparty risk, right? Instead of what you can do with Lightning. But the combination of base layer transactions via Bitcoin wallet and then layer 2 transactions via Lightning wallet, I think those two things together, are they're clearly superior as an application level protocol. Mm. And if you group them together and say that is the non-custodial, decentralized, open source protocol for moving money around in the Bitcoin standard, then you've got the structure of something really compelling. Another way to describe this is Bitcoin gives you a base layer protocol to move large sums of money around at small cost in an hour. And it gives you a layer 2 protocol to move mid-level and small sums of money around instantly for almost nothing. Mm-hmm. On my Lightning wallet, I can move 1,000 Satoshis at the cost of 1 Satoshi in a second, which is more efficient, right? I can move 100,000 Satoshis. It's like $30, right? I can move $30 for 1 Satoshi in a second. That makes that layer 2 protocol, faster and more efficient than any other currency transfer protocol that I'm aware of in the history of the world. I think the Lightning Network is really strategic to the proliferation of Bitcoin. But as a theorist, I think that what's critical to Bitcoin's success is not the Lightning Network, but the underlying Bitcoin final settlement. Mm-hmm. As long as someone can take final settlement of $100,000 in an hour for $5 or 50 cents, or I think right now, probably if you had set a lower fee and you were willing to wait longer, right? You can take final settlement in a day for a nickel, some very small amount. And if you want it done fast, then you pay more. Yeah.